What's up, everybody? It is Thursday, January 13th. So, market sold off today. I couldn't find any particular reason for the sell-off. I mean, there were some articles, stories about, the PPI. Actually, if you look at the PPI, the actual index, the producer price index of all commodities, that actually fell in December, and that was the first decline in 20 months and also the largest decline in 20 months. So that was, I think, a positive development if we're talking about, price pressures, etc. Now, those are commodity prices. It's the wholesale prices. It has not fed through to the CPI. It takes a little bit of time for that to happen. Also, remember that in December, we had a pretty sharp pullback in energy prices, and that was a factor. Since then, energy has bounced back up again. Folks, remember, inflation, really the definition of inflation is a continual rise in the price level. It's not a one-off situation like we have now that is due to pandemic and supply shortages. I mean, if you look at a chart of inflation as represented by the CPI, I mean, if you go back in the 1970s, that was, going up in a very linear fashion, and it was going up at a time when the Fed was steadily raising interest rates. The interest rate peaked out at like 21% in 1980 under Volcker. That created a demand shock. What is a demand shock? It is when prices rise faster than demand can keep up, and that was completely created by the aggressive rate hikes by Volcker. And the demand shock just, caused everything to crash. And then the Fed started cutting interest rates, and that helped to accelerate the decline in prices. And basically, prices have been flat or down since that time until recently, because we've been in a global pandemic that has created unprecedented supply chain issues. I mean, if you look at a chart, it's just like flat. It's the decline from the early 80s, then flat, and then boop, just up sharply in 2020. And it's not a function of monetary policy. It's not a function of, the money supply. I mean, if you look in 1980, the total national debt, if you want to call it that, of the United States was $800 billion. That's the total amount of dollars that have not been taxed back by the government. So that is your stock of dollars. And that went all the way up to, what are we at 28 trillion? I mean, so that was literally, what's that? That's like a 40-fold, almost a 40-fold increase in that stock of money. And all through that period from 1980 until 2020, inflation was, very subdued. So it's not a question of the stock of money. Inflation is not the money supply. I mean, I've heard people say that is just not the case. Inflation is a function of price setting. I think I talked about this. If I make more money, I don't demand to pay a higher price. I don't go in there and ask to pay a higher price for goods and services. Somebody has to set the price higher. And a one-off on price increases, which is what we are experiencing, is not inflation. Inflation is a continual rise in prices, and it is very often put in motion by central bank raising rates. We saw this in Turkey, central bank raising rates for years, and the inflation rate spiraling higher. A friend of mine just sent me a chart this morning, very interesting chart. After months and months and months in Russia of rate hikes, the inflation rate keeps going up. Like the article was written like, can't understand this. We've had all these rate hikes and then inflation keeps going up. I mean, any credible science would say your thesis, your hypothesis is wrong. Like the idea that, hey, we're going to raise rates and squash inflation, and then you literally have these two lines that you can go and superimpose one on top of another. As they hike the interest rate, the inflation rate goes up. I mean, it's just sheer logic. It's academic. I mean, when you raise the general price level by raising the interest rate, you are not squashing inflation. I mean, eventually at some point, like what Volcker did, you create a demand shock because you start raising rates so fast in this crazy effort to stop inflation that you widen the differential between the price and the ability for demand to keep up with that price, and then everything crashes down. And then they say, oh, you see, it worked? Well, it worked like the barbers who they used to believe were doctors back in the 19th century when they did bloodletting, and a patient came in, or somebody, poor fool, came in off the street and said, I don't feel good. Hey, let's drain out all your blood. Okay, you still don't feel good? Let's drain out some more blood. Oh, you still don't feel good? Let's drain out some more. Now he died. And then they say, well, that was a success because he's not suffering from that illness anymore. Yeah, but you killed the patient. It's exactly what happened. The other thing I'm really concerned about, and I made a couple of videos on this, and I don't know if people are in the West here, in America, in the news, the mainstream media, they really are not paying much attention to this, but the Russia-NATO Ukraine situation, and the US-Russia had talks this week. The talks were a failure. I just saw a tweet by this goofball Marco Rubio, senator, saying, it is now almost a certainty that Russia is gonna try to invade parts of Ukraine. Well, look, when you create a situation where they have no other choice. I mean, you're literally, NATO and the United States, the intention is to move nuclear missiles into Ukraine. This is, at some point, the Russians are going to say enough is enough. I mean, you got nuclear capable missiles in Poland, you got them in Romania, you got them in the Baltic states now. You have military naval exercises in the Black Sea. Now Ukraine, again, I've used the analogy that if Russia or Iran or China were to move nuclear capable offensive weapons into Canada, the border of Canada and Mexico, what, you think the United States would just stand by and allow that to happen? I mean, these people are psychopathic warmongers. Nobody's paying attention to that. Look, I couldn't find any real particular reason for the market sell-off today. And I don't usually ascribe market moves to some, secret information that people may have on the inside. I mean, a lot of times, and I would say 99.9% of the times, these moves are generated just by emotion and lack of understanding. I mean, we see this all the time with the Fed, how you get these emotional reactions. But really, I couldn't find anything to justify the sell-off today. Now, let me set that Ukraine situation aside for a second and just talk about this from an economic perspective. Actually, the fundamentals look really good. Fiscal flows are strong. We just got the second Social Security payment for January. That was $22.4 billion. That compares to a $19.8 billion payment, the second payment in January 2021. So that's up 13%. And that makes sense to me because that's what the 6% cost of living increase plus the new enrollees into Social Security. Again, I talked about this. We got the retiring baby boomer generation. More and more every year are becoming eligible for Social Security. I'll be eligible for Social Security this year. I turned 65. So, I mean, that's just, this is the bulge in that baby boomer generation, and this is like an automatic fiscal expansion. So that $22.5 billion, that was the second payment, that's a 13% increase. That's a sizable increase, all right? So you got that happening. Fiscal looks pretty good. I've been talking to you about the bank credit situation. We see an expansion in bank credit. We see an acceleration in loans and leases. That's a positive thing. Whatever we're losing on the fiscal side, I mean, we're going to see a pickup in the bank credit, and that will sustain at least for a while. economic activity. So setting aside that geopolitical issue, the Ukraine, NATO, US, which is very, very serious, I would say that today was just some kind of a emotional reaction, maybe to the CPI. Even the CPI was reported as a up 0.2% print when the expectation was up 0.4%. So it's moderating there, and we did. There was a little rebound in bond yields, but we've not back to the highs. But that maybe was a factor in unnerving at least the Nasdaq. But I don't see this as a resumption of the downtrend. But I will say, like me personally, I'm still very, very focused on that Ukraine situation. And if that thing blows, if we, get some kind of military action in there, I think we could see a very significant reaction in the market, a negative reaction in the market. I don't know if it'll be sustained reaction, but we will see a negative reaction in the market if that thing ends up erupting into some kind of a hot conflict. And look, again, I don't see any other alternative for Putin. I mean, he's been boxed in, he's been put in a corner. I don't think he's going to allow a NATO expansion into Ukraine. I certainly don't think he's going to allow high-level offensive weapons, perhaps nuclear-capable weapons in eastern Ukraine on his border, and that's a powder keg waiting to blow. And I knew these talks were not going to amount to anything. The United States was not sincere on this. I do believe that the United States wants to provoke Russia into a situation because I think the U.S. has now put together a range of very, very significant, at least what the U.S. believes are significantly harsh sanctions that are going to be levied on Russia for any military action. But I think, look, the Russians have to be preparing for this right now. But again, this is not a good development. It's very, very destabilizing, I think, globally, or it will be. And I mean, I don't know. I don't know what to say. It's just like really, really frustrating to see these war-mongering psychopaths in Washington, on a hell-bent mission to start a war with the largest nuclear superpower, or at least equivalent to us. They're lunatics. They're absolute lunatics. Anyway, let's stay focused on the economics. Let's stay focused on the markets. For now, I'm telling you that the pullback today was a buying opportunity. Things are looking good, and we're going to go higher. The other thing, let me just mention quickly, this week's AAII sentiment survey, high levels of bearishness, very low levels of bullishness. If you look at that from a contrarian perspective, which I do, I think that's a good setup for a continuation of the market rally. Anyway, that's it for today. See you tomorrow. Bye.